Hello everyone, welcome to the daily market analysis video where I try to share my knowledge, my insights and my view going forward. So without further ado, let's jump on to the analysis. So starting the analysis on the weekly time frame, I wanted to share one important thing, that is in the weekly time frame, the 5-day EMA, that is the 5-day exponential moving average, is acting as a strong support since the start of the week. So let me show you what do I mean over here. So this is the weekly chart. I mean, all the candles are in the weekly time frame, and you can see over here, this blue line is a 5-day moving average. So essentially what we have done is, today is the end of Thursday's trading session, Wednesday's trading session, and so far we are holding to the 5-day EMA. So this 5-day EMA is, acting as a strong support. So, in the weekly time frame, we bounced yesterday as well, we bounced today as well. So, so far, the 5-day moving average, that is the shortest term sentiment, is still positive. So that's my take on the weekly time frame. There is no major development in the terms of weekly time frame is concerned. So let us now move to the daily time frame. So in the daily time frame, I wanted to discuss two important developments. So as discussed earlier, we consolidated, in a chop zone for almost 3 weeks. And the new update is we are back again in that range. So let me show you exactly what I mean on the daily charts. So as you can see, this is the daily chart. And I want to update a small thing as far as the daily chart is concerned. So remember that we made a bottom on October of 26, that is last month, last month, I'm sorry. And what I did was I wanted to know like exactly, what is the set of, reasonable expectations of the market just in case if it decides to pull back. So what I did is I have drawn a Fibonacci technical pattern from the bottom of the October lows to the high of the November, month. So what is this Fibonacci pattern? It's a technical indicator which can state that how deep can be a pullback. So let's say we consider that we are in the uptrend, and if we want to know like how deep the pullback can be, then the most desired ratio is 0.5 to 0.618. So this is the zone in which, a lot of buyers will step in according to the Fibonacci pattern. So I have drawn these levels just for us to understand, like if the market tries to go down, then how much will it go down? Now, in my personal humble opinion, if we come down into these levels, that is 0.5 to 0.618 level, then that would be a screaming buy. So that's my update on the drawing or the charting as far as daily time frame is concerned. Now let me discuss the range. So I showed you that this range we are only consolidating and we are not breaking out either on the upside or on the downside. So remember the trading session of Monday. So on Monday we had this extreme range. For example, so the lows of the day to the high of the day, it was 300 points. So the range was very wide. So let's say that if we want to go up, then we have to break this range's high, that is 16,028 level. And if we want to go down, then this level, that is 15,700, that corresponds to the low of Monday's trading session, would be very, very important. And why am I saying this is because yesterday also we got an inside day. So inside day meaning the market is not able to clearly decide on the direction, and everybody may be waiting for the jam-packed week of this week. That is, we have a lot of economic data announcements for this week. So market may be may wait for a couple of days, ingest the economic data release, and then it may decide the direction. But as far as technical analysis is concerned, what we need to do is we need to look out for this range. So if you see over here, this is the range that bears need to break in order for the markets to go down. And this is the range in which the bulls needs to break out for the markets to go up. So in this, if the market is constantly in this zone, there is a heavy indecision. So expect a lot of chop, right? Expect a lot of consolidation. But again, what news will be the catalyst resulting in the markets to go in either direction? Nobody knows. But what we can do about it is we can be aware of such news event, and then we can know and make sure these ranges, right, and try to be try to predict in a very nice risk reward ratio. So talking about today's action, we today tried to break out of this top of the range, right? If you see over here, the Monday's high, we tried to break out, but we did not sustain over, we did not build over this level, and surely we came down crashing after touching these levels. So today there was a lot of economic data release, and more importantly, on Thursday, that is tomorrow's session, and on Friday, there is a lot of economic data releases, which can be a trigger for the markets to have a clear direction. So until that changes, always be very aware that you can expect a lot of chop over here. So second thing that I wanted to discuss is, as you can see over here, this subtle white line is the anchored VWAP that got generated at the start of the month. So this white line apparently is acting as a very big resistance zone. So until and unless we close above this white line that is anchored VWAP, we cannot be bullish. Now, why do I take anchored VWAP into the consideration while I'm doing analysis? It is simply because the anchored VWAP takes into account the volume in a specific time range. So normally, anchored VWAP that I have on my chart is getting refreshed every month. So we know, like for sure, where exactly the mass buyers and mass sellers are. So that's my take on daily analysis. And now let's go to the intraday analysis. But before doing that, just wanted to let you know that until and unless we break down below this level, we cannot be bearish, and until and unless we break out above this level, we cannot be bullish. So until that range, until that we are in the range bound markets. I know it can be frustrating, but we don't trade the markets that we want. We trade the markets that we have. So let the markets tell us and confirm us, and always be responsive rather than reactive. So that is all I can say about the daily time frame. So now let's go to intraday time frame. So in the intraday time frame, I wanted to discuss like what are my strategies, and let me show you exactly what I mean. So in the very start of the session, we got a bearish crossover, and that set the tone for the entire day. So let me show you what I mean. So when we go to the intraday charts, this is the intraday chart. And over here in the opening itself, the first 5-minute candle was of 68 points in the downside. So we knew that going into the today's session in the morning itself, the market is selling off. So as you can see, we got the bearish crossover in the first 15 minutes of the session, of the start of the session. So this was the bearish crossover, and you can see it tried multiple times to challenge that and build a bullish crossover, but we did not actually close above it. So what do I mean by a bearish crossover? A bearish crossover is when the short-term moving average crosses the long-term moving average to give us a sell signal. So over here you can see the blue line crossed the red line, that is the 5-day moving average, crossed the red line, that is the 26-day moving average. That was an indication to sell. Now what happened with the entire session? In the entire session, we did not get a bullish crossover afterwards. So we knew going into today's session that the market is selling off. We got the bearish crossover. So today there is a very good opportunity to sell short. But the problem was it never gave us a clear red signal, because normally what I do is I wait for the all the economic data releases to happen, and then I usually start my trading positions after the 30 to 45 minutes of the session. And as you can see over here, I waited for 7 o'clock and till 7:30, but I did not have a good short position. So what I did was I went to the hourly chart. So if you go to the hourly chart, you can see over here that there was a support of the pivot level S1, which got holded very nicely after the first hour of the session. So I was of the opinion that, okay, if this kind of all the news are over, and afterwards, like you can see over here, the only major news that we had today was related to the crude oil. So the crude oil news was on 7:30 Pacific time. So I knew that all the major news of over here were pre-market. So the sell-off won't be that bad. So I was expecting a bounce from the pivot level P0, that is the white line over here. And that's exactly what happened. So I was able to grab a counter trend rally for 5 to 10 points. In one of my accounts, I was able to hold it for much longer, for almost 20 to 25 points. So as you can see over here, the reason why I started to take long calls on the scalping is because I was of the opinion that if I go to 1 hour chart, and in the 1 hour chart, when the price first interacts with the S1 level, we should ideally have a minor pullback. So that's exactly what happened, and that's exactly I was able to grab on the intraday basis. So since we did not get a bullish crossover, I had very little interest in holding the counter trend position. So I made sure that I liquidated my position after 15-20 points of profits on the futures contracts. So that's my thesis on the intraday. And as you can see over here, the closing was very bad. So the second half of the session, we actually broke down below the S1 support on the hourly time frame, that is this one. And also we are actually closing the session by the lows of the day. So that is very bad. So that's a whenever the selling comes in the second half of the session, usually it is concluded that there is real weakness. So did it violate a daily level, or did it cross the daily level? Absolutely not. It just on the daily level, it just broke down below the median line of the Bollinger Band. So that was the only significant level that got broken. So as you can see over here, that was the value for the intraday, and the Qs were pretty much in sync with the Nasdaq contracts entire way. So that is nothing new. You can see that VIX, if I talk about VIX was making a good moves, especially it was getting rejected. It was trying to go higher, but it was getting rejected at P0. So this was the take on VIX. If you look at the daily time frame on the VIX, it is making a green hammer. So this is a development wherein we can conclude that the volatility is trying to go up. So keep a close eye on this volatility levels. So this was my take on intraday. So let me discuss the further section, which is the macroeconomic update. In this macroeconomic update section, I wanted to discuss some of the news and the data releases which can be capable enough to have a real directional move in the markets. So going forward, we have Thursday and Friday. So over here, as you can see, we have a lot of critical news as far as markets volatility is concerned. So as you can see over here, tomorrow jobless claims are going to be big market moving events. Also the wholesale inventories and used car prices, they will have a little bit impact on the volatility. The main thing that I fear is the consumer credit change. Even that has a good impact on the Nasdaq markets. The rest of the other events like 4-week bond auction and everything will have minimal impact. So keep a close eye on these news levels. More importantly, the main thing that I wanted to discuss is on the Friday. So on Friday we have non-farm payrolls announcement. So basically it is a data release of the survey boards, wherein they discuss the number of non-farm payrolls across the United States. It's a pretty famous and heavy survey, and it gives you a gist of what is happening in the economy apart from the farming payrolls. So that is going to be a very big market moving event. Also, on 7 o'clock, Michigan consumer sentiment is also going to be very, very crucial. All these data releases are capable enough to move the markets, break down of the range. So keep a close eye on these, time zones. And lastly, the Wednesday report is also, kind of minimal market, impact, but still you have to, be aware of these news events, and more specifically on the timing of these events. So my main strategy is to avoid trading during these data releases. So what I would highly recommend is let these data releases happen, let the markets digest these news events, and then you can respond after seeing the price action. So this is my take on the macroeconomic update section. So lastly, I would like to thank you for viewing, and please feel free to like, share and subscribe. And until next time, see you guys tomorrow.